Glitch in the Matrix, folks. I am mining investor and editor of Resource Stock Digest, the very Mexican-American Gerardo Del Real, here with my partner, the very Italian-American. I'll explain the distinction to some of you numbskulls later on. Mr. Nick Hodge, who's also an investor and the publisher of Daily Profit Cycle. This is the 320th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk what we're investing in, recent private placement success, recent peak success, a lot to get to, a lot of crazy going on. Man, what a week. Mr. Hodge, first and foremost, how are you today, sir?
I am doing really great, Gerardo. As you know, it's the last week of school. My kids are doing the things, the field trips and the field days, which I'm missing to be here with you, and I wouldn't have that any other way. So I'm ready to get into it. It's a hot summer out there, as you were saying before we started recording, and we haven't even had the equinox yet, or the solstice. So how are you?
I am well. We're definitely in the midst of fourth turning, and unfortunately, this is the part where the people with the least representation politically and economically are, like always, like it's happened historically. It's just, our people's turn, right? Are the people being scapegoated for all the things, right? And so, how dare you, Nick, stay in America and call yourself an Italian American or say that you're of Italian American descent, or how dare I, love a country that my parents came from and also love a country that I live in and was born in here in America, and also have had just phenomenal opportunity. How dare we, right? If we don't love America and we love our ancestry so much and we embrace it so much, we should just go back. This is the stupid shit that is going on, posing as a debate. And I know that social media isn't real, but I've actually seen administration officials talk this way, policymakers talk this way, the people that are in charge of the departments that enforce immigration and the rule of law, which I'm a big fan of, by the way, law and order, which I'm also a big fan of. What I'm not a fan of is corruption or violations of the Constitution. And so we're going to start with what's been top of mind for me. It's a very real thing for me and my family. I'll share a personal story. Everybody knows that a couple of years ago, my mom got kidnapped by a cartel, and everybody knows that was a tough moment. And subsequently, my mom was here in the U.S. for maybe a year, and my mom's a U.S. citizen, right? She decided she wanted to go back to Mexico, didn't go back to the town that we're from because it is a mess, and that's a whole other conversation. A great example of what happens when there is no rule of law or due process or enforcement of said laws, right? So I know very firsthand, up close and personal, what it's like when due process goes out the window, or we just allow those with the bigger guns to dictate what's right and what's not. So my mom's on the way to visit here. I have a cousin that I grew up with that, is very sick and has a big surgery going on here in Chicago. And my mom likes to travel by bus. And the worry for me is double, right? She's literally on a bus right now. I worry about the situation that happened a few years ago repeating itself, which was not specific to us. It just happened to end up happening that way. And then I worry about her, despite being a U.S. citizen, facing issues at the border or getting detained. And again, this is 2025, folks. We're talking about a U.S. citizen. You and I, Nick, moments before this podcast started, we're talking about Senator Alex Padilla, who stopped by a Homeland Security briefing and was asking the head of Homeland Security a question. This is a public hearing, by the way, where cameras are there. And he said, "Hey, I have a question." He started to ask the question, and immediately 3 agents tackled him to the ground, cuffed him, dragged him outside, and subsequently let him go because he hadn't done anything wrong. And then Homeland Security has the goal to put a tweet out saying that they roughed him up and they tackled him because he never identified himself and didn't have his senator badge, except somebody else, members of the press, luckily, were filming this and have all of this on tape. And he clearly identified himself. She clearly understood he was a senator. And where I'm going with all of this is regardless of whether you're a Republican, a Democrat, a Libertarian, or just don't give a fuck, there needs to be due process. There needs to be law and order. That goes both ways, man. I look at these protests and the bulk of them are peaceful. And then you have assholes and looters and people that are desecrating private property. And for those people, there's laws. They should be arrested. They should be prosecuted. Absolutely. But you can't tell me we need the National Guard and 700 Marines and the entire LAPD, which doesn't have like a record for being like the softest approach on its own citizens. We need all of that to contain a bunch of thugs, which are in the minority, which, again, there's laws. You can arrest them. Go do your job with those people. When I see women getting trampled, when I see kids getting pepper sprayed, it's heartbreaking, man. And again, if they'll do this to a senator while a camera is rolling and just straight up lie about why they were so rough with him, I can only imagine the stuff that's going on behind the scenes to those that don't have immigration papers, or those that don't speak, perfect English, or those that don't have a powerful attorney that can get some shit done. It's been a tough week on this side, Nick, on that front, right? So I hate to start on a somber note, but I feel like we're at one of those inflection points in the country where, look, even President Trump, who's instigated a lot of this shit, came out today and said, hey, my wealthy friends that own the hotels and the farms and stuff are calling me, and they're telling me I got to chill with the way we're doing this. That we can't just keep kicking people out if the only crime they committed is they don't have immigration papers. He said, I had a farmer rancher call me and tell me he's losing people that have been with him for 20 years that have never been in trouble with the law. And yes, maybe they don't have the right piece of paper, but maybe that's because both administrations, left and right, have failed to provide a legal path towards citizenship that is reasonable. That's on both houses. So I don't excuse either administration, but the heavy-handedness that's going on right now, even President Trump says, I'm going to have to do something and use some common sense, because that's not what this was meant to be. This was meant to be a let's go target, which, by the way, everybody's for, including the illegal immigrants. They don't want the rapists next to the house with their daughters. They don't want the violent offenders. There's a difference and a distinction to be made between people that are just working hard, man, and want to contribute and are otherwise paying taxes and just don't have a legit way or path towards doing it correctly. If they're not breaking any other laws and they're working hard and they're contributing, we're a better country than that, man. We're founded on law-abiding citizens. And yes, we should have due process. And yes, we should have a system where violent illegal offenders are deported and gotten rid of. That's not what's happening in America right now, folks. So that's my rant. Sorry to start on a somber note. We'll get to the markets eventually, folks.
No, it's been dominating all the headlines. So you sort of got to start with, where the consensus attention is. And it obviously hits close to home for you as a Mexican American, as you said. And I, too, come from a family of immigrants, as you intimated to start the podcast there. So I hadn't been paying as close attention, but I would like to articulate my views, I suppose, on it, if that's okay. So,
absolutely,
I think
what we're here for.
I think there's lots of blame to go around. I think that the way the administration has approached these deportations and roundups is in a way to serve up red meat to their base, right? They wanted the optics of it. They wanted to appear as though they were fulfilling campaign promises, whether or not that has to do with Project 2025 or whatever that thing was called. I think that they wanted this to get media attention, and I think they wanted to show optically that they were being tough on illegal immigrants and that they were doing something, that there was action. So there's that. I think that it's a dog and pony show in many respects, not just because of what I just said, but because we are, a late stage in the fourth turning, which you also mentioned, and the erosion of the institutions just continues to erode. it's like a hillside, right, or a cliff that erodes and erodes and eventually collapses. So it's getting thinner and thinner and thinner, and it's like volatility in the market in that respect. If you know, view it through the lens of like a volatility index, as the volatility index spikes, the shit gets wilder in the market, right? The
Yeah.
price swings get higher to the upside or the downside, and you're seeing that in society, right? The swings get more
Yep.
extreme, and the partisanship gets more extreme. You said it well that there's been, no real path to legal immigration for some time, and that falls on both parties, really, the Democrats and the
Yep.
Republicans. And then I'm not super up to speed on it, but I caught a quick article about like DACA the other day, which was supposed to be temporary under Obama and never sort of got resolved. So there's a lot of ingredients in this stew, and it's unfortunate the way it's played out. I'm no fan of police violence and police brutality. We've been through this with the protests in 2020 as a result of George Floyd's death and other things, Breonna Taylor. And so, I'm all for the Constitution, obviously, and for due process, like you said, and for, freedom of the press, which, for all the negative stuff I could definitely say about the media and the press,
Oh
they've
yeah.
got to be able to cover events and not get shot with rubber bullets and not be detained while they're doing their jobs. So, what else did I want to say? Oh, just one more thing about the laborers, you said, but the hotel owners and the industrial farmers, calling up the administration. This has been an ongoing theme and narrative in this debate for a long time. I remember Colbert, back on the Colbert Show,
Yeah.
hosting or conducting an experiment where he was offering to hire white people who wanted to go pick strawberries
Yeah. That was
uh,
brilliant,
in
by
the
the way. I
California. I
remember
mean,
it.
nobody's applying to go do these jobs, right? So, I have 3 kids, and there's blueberries and blackberries and strawberries in the fridge right now. Like, somebody's got to pick all those things, right? And it's not going to be me, and it's not going to be you. So you see where the rubber meets the road in terms of how far policy and administration actions can go before it impacts what truly matters in this country, and that's the bottom line, right?
Yeah. And you articulated that very, very well. And I'm going to tie this into the markets in 2 seconds, y'all, I promise. But there's rumblings now that Israel is going to attack Iran here in the next coming days. The energy prices have indicated as much here in the past week. If you've been paying attention to the price of crude oil, the U.S. actually has been public this go round, both Republicans and Democrats saying we have no business facilitating a war with Iran. They haven't done anything to justify that. For the Israeli-backed U.S. to actually say we don't want this war says a lot considering what they're doing in Gaza, right? If Israel makes a move without U.S. blessings, again, fourth turning stuff. I don't know where we end up. Bombing, and maybe it's not. Maybe it's not bombing Iran. Maybe it's taking out, technology infrastructure. I don't know what it's going to be, but I'm watching that, and the silver market, the oil market's responding to it. The gold and the silver market are responding to it as well. Gold now back right around that $3,500 level, had itself a week. Silver firmly above 36. So again, some of this is societal and some of this is personal opinion. Some of this is, legal and illegal, but it all ties in and it all has a very real effect and consequence on our economy and our markets, right? And so thoughts on, I want to start with energy because you pay attention to energy a lot more than I do. It's the one sector I've said always, I'm just not wired for it. You give me gold, silver, copper, lithium, PGMs, rare earths, it clicks for me. Oil just never has. Neither has natural gas. So your thoughts on the energy trade there and what you've seen this week? I have noticed it though, and I was watching and tying those two events, the correlation there.
Yeah, first a caveat, and I was thinking about this week because I tried to start buying oil stocks last month. What are we in June? So last
Yeah.
month in the May issue of Foundational Profits, I put out a buy on XOP, which is a subsector of XLE, which is the energy sector of the S&P. Um, it had been weak. I mean, oil was $55 a barrel just a couple of weeks ago, and I was looking at the earnings reports because back in May it was the Q1 earnings reports were
Yeah.
coming out for all the energy companies, and I had made the determination that they were bottom ticking. This is before any murmurs of what you're talking about,
You've
bombing
done a really
Iran
great job of that lately. We're going to talk about that in a minute.
or anything like that. So, and then what happened is we didn't get our price, and the price of oil started going up, which is what
Yeah.
you just said. And it's funny how, and I've been writing more and more about this, the market front runs these things because someone always knows something. And I'll talk more
Yeah.
about other commodities. And so, um, this month I was just writing my monthly issue again, and I was set to raise the price target on which to buy that XOP ETF because I still want to get in. I think, as I told you in recent episodes, I don't think we get a recession. I think we get to economic growth, and that's my main reason for buying oil, and also one of the reasons that oil's been going up. And then lo and behold, oil's just been going up. I just said it was $55. I'm talking about light sweet Texas crude. West Texas Intermediate was 55 dollars a barrel just 3-4 months ago. It's up to $75 a
Yep.
barrel now, right? And so that's on the energy side, and this is comes despite talk of OPEC increasing production, etc. So something's going on out there, and that something is very fascinating to me as I get older and I look at markets and I see what truly moves them. I just said the oil front ran any of this geopolitical stuff.
Yeah.
And so the human brain, yours, mine, lots of folks, they want a narrative, they want a reason, right? And so we
Sure.
say, oh, there's going to be unrest in the Middle East. And, I'm old enough to remember a month ago when India and Pakistan were bombing each other, and we were on the verge of nuclear war, and that didn't materialize. So,
Thankfully.
yes, these
Yeah,
underlying
never
issues
root for
never
these
go
things.
away. At least as long as I've been alive, the Middle East has been unstable. But the broader point I want to make is on inflation, right?
Yeah.
Because we got the May print, the CPI the other day, and inflation's going back up,
Yeah.
which I've been
It's running
saying
hot.
it was going to do. So 2.4%, driven, I would say, by that increasing oil price and others, right? We've talked about silver, we've talked about copper. I would submit to you, and this is what I was writing about in that June issue of Foundational Profits, that having a reason is good, but it's really the inflation cycle and the commodity cycle that's doing these commodities. And so I'm going to tiptoe away from oil for 1 second because inflation had been going down, right? It got all the way
Yeah.
down to 2.3% in April. And what had happened in the past 6 months? Well, I just said oil was down at 55. We saw copper was headed down, right? It spent most of the past year closer to 4 than 5.
Yep.
We know lithium's been soft. Uranium had been going down from $106 a pound down to 60 some dollars a pound. Those hard commodities had been soft for the past 6 months to a year, really since late last summer. But the softs were hot. This is sort of a long answer. Sorry, I got away from energy.
No. It all ties in is what I'm trying to demonstrate, and you're doing it beautifully, by the way.
For sure. So you'll remember that the soft commodities, the things you grow, were the ones that were hot over the past year, right? As the lithium came down, uranium came down, copper came down, oil came down, but corn was up something like 30%. Wheat was up 17% since last summer. We couldn't
Eggs,
get
beef,
you're nailing it. So I remember the coffee headlines, the chocolate headlines. Your lover's not
Facts.
getting chocolate for Valentine's Day because it's so expensive. Hershey's got to turn away from chocolate candy going into sugar-based candy, all that stuff, right? That was this spring. Well, here we are headed into summer. If you look at a chart of oil, if you look at a chart of corn now, it's coming down. And the reason in the headlines is a bumper crop in Brazil, but really it's just a rotation of that inflation, right? Wheat coming down, coffee has come down, eggs have come down. What's gone up? The first things I talked about. Oil, the hards now go back up. Copper's back at $5. Silver at $36. I was telling you recently it's more industrial now because we weren't going to get a recession. And this is the ebb and flow of not just inflation, but the commodity super cycle, which I wanted to make sure I brought up in this talk, because we've been talking about a lot. Been talking a lot about the commodity super cycle for the past couple of years. I believe we are in one, and I believe it
Yep.
started in 2020. What happens though, and we articulated this in the presentations that
Yep.
in webinars that we've done, is sometimes the super cycle retraces all the way back to the
Sure.
average or the base from where it started. While remaining in a super cycle, and for different reasons, right? Which is what we're sort of walking through now. So that's sort of the end of my answer. You're getting a rotation now, right? Away from the softs and into the hards. And that's why it's time to buy. It has been time to buy copper stocks and oil stocks, which is why I was recommending them in March, and silver stocks, etc. And you should be set for inflation to continue to rise, likely in June, because now these inputs, the commodities that I just laid out for you, are going to be, oil is one of the main things that goes into the CPI, right? So I don't know how to tie that up, except that you don't always have to search for a narrative or a reason. The market often knows things about that narrative or reason long before the
Yeah.
headline hits on Reuters or CNN or whatever your flavor of news or media is. And that's sort of how I've taken to looking at the markets, is from a macro lens that is driven by inflation and growth, and hat tip to the hedge eye and the Keith McCullough, because that's the framework through which they view the market. But once you sort of understand that and it clicks, you can just look at the market and see, based on the GDP, CPI numbers, and then the commodity prices doing what they do. So a bit of a roundabout answer there, but yeah, oil's going back up. And the hards are going back up too. So we can talk more about those if you'd like.
Yeah, I mean, briefly, because I think everybody's going to know kind of where we sit with stuff, right? Gold looks phenomenal to me. Silver looks phenomenal to me. Technically, where do you see each of those, Nick? You have gold right at that $3,500 level. It didn't like leaving that for very long, right? It pushed back to the 3,300s. I was like, nope. Inflation's ticking back. We're going higher, right? Same with silver. It finally had that breakout past 35 that we've been teasing here for months, and try to position y'all, frankly, and letting y'all know that, look, that's going to be that indicator. If it breaks 35, it's likely going to 38. So here we are at 36.70. It's headed to 38, in my opinion. And if we break 38, and that becomes the new floor, we're headed to 42. And if that happens, we're off to brand new all-time highs here in the next 12 months. I can't help y'all anymore with some of these picks, because I've been saying the same names over and over, and the same names keep doing very, very well. Look, we did a private placement. We helped a company raise some money, and it provided access to subscribers of private placement intel. I wrote an article this week talking about PGMs, which we didn't touch on, and we're going to touch on it because, again, the narrative is EV mandates are going away. Combustion engines are going to require a lot more PGMs than we thought they were. So guess what? Platinum and palladium have had themselves a heck of a run the last 30 days. Platinum's up some 30% quietly, right? And almost no one is talking about that. I say all that to say copper's also likely headed much, much higher and headed towards brand new record highs. We had a copper company that we provided access to our subscribers to, did a financing. Lots of people. I love this. I love when people take advantage of the network and the due diligence, right? And lots of people participated in that. And that makes my heart smile, because that financing is less than 2 weeks from closing. It closed 2 weeks ago, and it's already up 110%. And it came with a full warrant. The full warrant's already in the money, folks. So if you're running a family office, or if you are an accredited investor and you're just running your own money and you have any more than $10,000 to put into the market, it doesn't take a lot to do really, really well with these private placements. Your $10,000 2 weeks later is $20,000. And oh, by the way, you have 2 years or 3 years on a 10-cent warrant that you could just sit on. And if the company goes to 50 cents or $1, you can buy 10-cent shares for the next 2 years at any point. The way that you compound profits in this business is by being early, doing due diligence, leveraging the network, being right. We've been fortunate enough to have people around us, Nick, that have been generous with their time, provide us access to the network. I'd like to think that we've done right by people. When we get them wrong, we raise our hand and admit that we did it, and try to figure out why. And when we get them right, we like to pound our chest, because at the end of the day, we're biased as all hell in every name that we bring to you. You damn right if I recommend a stock, I'm biased. And yes, I likely have written checks for it. And if I'm writing a check into something of my family's own money, you better believe I believe in the investment thesis, right? Or the speculative thesis and where I think that's headed. So I say, look, gold and silver, copper, where do you see those three charts? I think they're all headed higher, but I'll let you be more technical about it. That's what you do.
No, you did it pretty good. So, um, I would say this. I would say more bullish on silver than gold at the moment.
Yeah,
And
agreed.
that's because of that industrial nature that it has. I think that the market has stopped pricing in so many rate cuts this year. We just
Yep.
said that inflation was going back up. Have seen a little bit of well, I won't even mention the labor market. It's kind of okay, but seen inflation back up, and as inflation ticked back up, the sort of rate cut that were being priced in are out the window. I think we're only pricing in one, perhaps two. And so I think that makes it tougher for gold to go up, given the historic inverse correlation to rates, right? Yeah, the other thing I see is rates remaining relatively strong. I'm not talking about the 10-year going over 5, but I am talking about it sort
Yeah.
of staying where it is, because economic growth is going to support higher rates. So in that environment, then silver looks stronger to me because it
Yeah.
gets any tailwinds that gold is getting, plus the industrial stuff because of the inflation and the
Yeah.
economic growth that I just sort of laid out for you. So you laid out the technicals on silver, and I've done well on silver stocks and continue to own them in multiple capacities in ETFs and in individual names. So yeah, that's that. As far as the private placements, I pulled it up because you were talking about it, and I had actually put out an alert earlier today to private placement intel, where I noticed that 7 of the last 12 deals we've done, so basically every deal we've done in 24 and 25, 7 of 12 have already more than doubled. And I know we're not trying to give away free names, but you mentioned the ones you've been pounding the table on. So 2 of those include Hannon, which is up 222% since we financed it last June at 35 cents, and we had 50-cent warrants in that I've already exercised. I mean, the stock's up over $1, right? So those 50-cent warrants are 100% in the money, even though you've got another year
Yeah.
to exercise them. And by the way, this is before any drill results. They're drilling
Yeah.
now. And then the other one is Kingsman, which is up 344% since we financed it last October at
Also with
25
a full warrant.
cents, at 25 cents, and that comes with a full warrant at 40 cents, right? So I mean, yeah, quality deals, and those are the 2 biggest. There's 1, 2, 3 others that are up more than 100%. Not going to give you all the names, of course, but yeah, the deal flow's been good, and the equities are starting to respond to these elevated commodity prices that we're seeing. So I would expect more deals in the second half of the year. And as you say, if you're able to participate in private placements, it behooves you to do so. I keep like a little stock watch portfolio of my warrants, and for a while they were all out of the money, and all of a sudden I look, and 8 out of 10 or whatever are in the money with a green number next to them, and all of a sudden you've got high 6 figures in warrants that you can cash in at will. It takes it alleviates I don't want to say money problems or concerns, but it definitely gives you options, right? When you're thinking to yourself, how am I going to cover this tuition, or how am I going to pay for this vacation, or whatever? Well, if you can exercise warrants, it gives you that optionality there that wasn't there before these equities started responding. So yeah, private placements have been good, and then commodity prices have been good as well.
It's always nice to go to Disney World and come back and have more money than before you went, right?
No doubt.
Look, I want one last take on sector rotation. I want to quote Paul Tudor Jones, who did an interview this week. He said, you need to diversify with stocks, gold, and Bitcoin, adjusted for the relative volatility and the betas. Basically, what he's saying, folks, in simple layman's terms, I'm a simple guy, get away from the dollar, right? And get into assets that are not dollar dependent. He's staying away from bonds. He's staying away from, a lot of other things. And he's making it a point to show people. And I love this because often in the Bitcoin world or in the gold world, it's Bitcoin versus gold and gold versus Bitcoin. And hey, guys, We can make money with both. I'm not a crypto guy, but our crypto guy is rocking it, right? Bitcoin back above 106, touched 111 here recently. I remember being 80 here recently on a pullback, and we had Chris on here, and Chris said, "Oh no, this, if I'm right, this is a blip, and it's going to be back, over 100 in a hurry." He was dead right on that, and so there's more than one way to profit in this space, and Paul Tudor Jones articulating that kind of tells you where things are headed. That's big money. That's not Nick or Gerardo money, right? That's wealth that he manages, and he's not the only one. There's been several other very prominent hedge fund guys that traditionally have stayed away from talking gold or talking Bitcoin that are now saying, hey, like, you need to have a healthy allocation and exposure to these commodities and to these sectors, right? And so how you do that is up to you. But we're trying to provide you with the ideas, folks, and try to explain the rationale. And it's gone better than worse for us here over a very long time, thankfully, right? Knock on wood, that can change at any time. But, we're going to keep working hard and boots on the ground and keep taking the calls and taking the meetings and leaning on people to do the right things by our subscribers. And so, happy to do it, proud to do it. Thankful to be able to do it for a living and be compensated well for it.
Yeah. And not just, him saying that, but you can see that being reflected in the real world, whether it's central bank buying of gold, Chinese retail buying of gold. And they've also been doing some buying of the platinum recently, which has contributed to that going up. And then there was a report this week that I think gold has overtaken the euro as sort of like a currency diversification hedge, right? So think about that. I mean, Europe's a pretty big place. It's like one of the 7 continents. I think there's 100 and some countries in it, right? No, I got that wrong. Sorry, 30 some countries. No.
30, yeah.
But anyway, to overtake the euro as in terms of the dollar amounts that's invested in gold in the currency market it shows you that big money is diversifying into the precious metals. And yeah, it was over 100 countries in the world. I don't know what I was thinking, but and then the Bitcoin by gold debate never made sense to me, right? You can totally own both. And even the folks who are in that debate, like Schiff and Dan Held and those guys, it's like Bush and Obama at funerals and behind doors. Like Peter Schiff was just at the Bitcoin conference, right? So, own both.
Well said. Well said. Uranium. Again, kudos where, credit is due. The Trump administration wants to quadruple capacity here in the U.S. We talked about this last week. I'll mention again, it won't just be the U.S. that benefits from that. If we even double demand here in the U.S. over the next several years, our friends up north, maybe one day the 51st state, if Trump has it his way, our Canadian friends are also going to benefit significantly from that, because we're going to need more North American supply than we're going to be able to provide if the demand numbers actually hold up. We'll see if that comes to pass, but I like mandates that expedite permitting, and I like mandates that allow for this country to take its critical metals supply chain seriously, because it's way overdue. And by way overdue, it's like immigration, right? It's been decades since we had any kind of comprehensive critical metals policy here on a domestic basis. The thought that we are such a war-hungry country, whether you like it or not, that's what it is, right? And that we have to rely on foreign countries and sometimes adversaries for the materials that make the satellites and the missiles and the bombs and the fighter jets and all of that, is beyond bonkers to my simple brain. And so, yes, securing domestic sources of that in an expedited manner is great for the country. It's also going to be phenomenally great for our portfolio and for subscribers who, again, in Junior Resource Monthly, I'm sitting on uranium names that I've had for years that are up 300%, 500%, 600%. And in my mind, we're just getting started. Well worth holding some of those names for a few years, because sometimes the easiest thing to do is to just know what you own and sit on it. You don't have to be the person that's in there day trading all day, every day. That's very stressful, and it's very hard to time a market. Sometimes it's just be a simple guy or be a simple gal. Take the theme, study it, research it, see if it's real, find the better names, get lucky with a couple of the exploration stories, and just ride it out. Sometimes it's not that difficult. Uranium is one of those trades, right? I gave y'all a name last week. By the way, y'all did good. You got in there in that market and bought the heck out of it. I think you're going to do well. If not, blame me right in. But the private portion of this, the premium private portion of this podcast, y'all know what I'm talking about. I think that company with a $7 million market cap and coming from a CEO that's coming from a company where, you know, it was $1 billion plus company at one point, him coming in as a director with this company opens up a Rolodex and a network that I think is going to bring some excellent and exciting flagship assets that'll take that $7 million market cap much, much higher. So that's my rant on uranium, on gold, on silver, on copper. Trump and Musk are besties again. I think he must be in the files. He didn't say no, and now Trump's like, you know, we said some things. I said some things. I still like my Tesla. We're cool. Elon said, about bad. I got a little carried away. Somebody got some Ackroyd real quick.
Yeah, hold on. I'm going to do uranium first. And then, I sort of knew that spat was going to dissipate. I mean, it seemed, again, dog and pony show, right? Theater, the whole world's a stage, all that sort of stuff. Went away as fast as India and Pakistan. And, you know, I don't know whether or not Epstein is in, or Trump is in the file, the Epstein files or not.
We know Epstein is.
Likely he is. But, you know, also you have to think, you know, what was, you know, Biden and Obama doing with that information? They likely would have put it out there if he was, right? So who knows, man? Who knows? I did unmute Musk though, so I took your advice and unmuted him after last week so I could see what he was talking about. But just quickly on uranium. So I was going to make a joke about the NHL Stanley Cup Finals and our Canadian friends in the 51st state, but I won't do that. I wish Edmonton all the best. They had a rough loss last year after coming back and are down again, I believe. They play tonight, but we'll see. The uranium news continues to go well. You gave kudos to the administration. They've been doing some good things. He put out the executive order on improving the U.S. nuclear industry and the supply chain of the uranium fuel cycle. They approved a project in the American Southwest in 2 weeks, the Department of the Interior in 2 weeks. I can't remember whether or not we talked about that last week or not. But like to see that, obviously, as a mining investor, and think that red tape is, and that NIMBYism is one of the things that's led to the precarious situation we find ourselves in terms of resource security. And speaking of resource security, those announcements continue to come as well. Before I get into those, I need to tell you that it's reaching into the common investors and the financial advisors and the rest of the world who doesn't pay attention to this stuff like you and I do. I was traveling the other week and I got a text from one of my neighbors and he says, you ever come across a company called Oklo? And I was like, oh man, we're talking about small modular reactor stocks in common man land. I'd love to see it, right? So I told him, and you should also check out a company called NewScale. These small modular reactors are coming on pretty quick. And then that stock has been bonkers, by the way. OKLO, that's Sam Altman, the Chat GPT guy. That's his small modular reactor company. Well, this week, the Air Force made an announcement that they're going to use that company's technology to start powering bases, starting with one in Fairbanks, Alaska. So that's literal resource security, right? I mean, using the cleanest, stablest form of clean energy there is to power the military assets so they can stay up and running and not have to be reliant on intermittent sources, etc. And that's just a pilot. I would expect that to go wider in the military, into other branches of the military and into other bases. So it's something to keep an eye on. But and also, like the gold bull market has unfolded, I would expect that to eventually trickle down into the uranium names at some point.
Absolutely.
There's going to be an oh shit moment. How are we going to power these or fuel these reactors that are getting life extensions and these new SMRs that we're building, etc. And then another shoe dropped on the technology side, same reasoning, but for the AI data centers. You know, we saw the announcements earlier this year and last year. 3 Mile Island and Microsoft and Amazon and small modular reactors Well, Meta had put out a big press release this week. They partnered with Constellation Energy to sign a 20-year power purchase agreement
Yeah.
to power AI data centers with nuclear, obviously. That's large nuclear, light water reactors owned by a utility, in this case, Constellation. The other thing that was in that Meta announcement is that they have multiple RFPs out, requests for
Yeah.
proposals,
Yep.
for other sources of nuclear energy generation, with a goal of getting to 1 to 4 gigawatts
Yeah.
of nuclear under their control. And so you couldn't sketch out. Oh, and by the way, I think the World Bank also lifted a ban they had on using their money to invest.
Financing.
Yeah, to
Yes.
finance nuclear things. And so
Meaning they know that they're going to have to finance these things. And before I lose my train of thought, just your point on the deal there in Fairbanks, Alaska, with the technology. Kudos to Lisa Murkowski. She is one of the few politicians I have a lot of respect for. She's been very supportive and a big champion for a long time of that technology, critical metals independence, and has been really good about working on both sides of the aisle to further, my old stomping grounds, Alaska. I lived in Anchorage, Alaska for 17 years. And so just kudos to her, because I come here and I rant and I rave and I critique the stupidity on behalf of our elected officials. And it's good to point out that there are some smart ones and some with integrity, and some that I actually think might be good humans, right? Don't know her personally, but I know people that do, and all have nothing for the most part but good things to say about her as a human. Effective politician for her constituents, and good work on that front.
outlier for sure, but they do exist.
So listen, we're getting a little bit long, and I know that we wanted to touch on a question. It was a really good question from Mr. Josh Harnett from Spokane, your stomping grounds there, Mr. Hodge.
Yep.
Did you want to ask it, and we can fire away?
Sure. Josh has been a longtime member. We ran into him at the Vancouver Resource Investment Conference, gave him a Dines book. He subscribed to multiple publications. I think he even gets his haircut where I get my haircut because of a question he submitted on this podcast. So,
I recall.
Yeah.
Shout out to Josh.
I'll read the question. Gerardo had mentioned that I'm not going to mention the company, but company retained.
I was going to say, don't say the name.
Gerardo mentioned that a company retained Nick and Gerardo to market on their behalf via Resource Stock Digest, which is one of the companies we own in addition to Digest Publishing. And he had a question regarding companies that retain us for those Resource Stock Digest services. He says, historically, how have stocks performed that Nick and Gerardo were retained to market? And do Nick and Gerardo put their own capital into these companies? Can we expect unbiased coverage and guidance around when to sell? I know they've touched on some of these points in the past. Wouldn't mind a refresher, whether it's here or in the podcast. So you want to go first? You want me to go first?
Yeah, no. Happy to start. Look, I love the question. It's an important question, and one that I'm happy to provide clarification on. So first off, Nick and I are friends, colleagues, but we're also business partners, right? We co-own two companies 50-50. One is Resource Stock Digest, which functions as a media outlet that essentially helps tell company stories. They pay us a monthly fee, and in exchange, we will talk to the company, create content, do interviews, and get that out to the audience so that the audience can make, hopefully, a more informed decision about whether or not they want to allocate capital into whichever company, or for entertainment purposes, right? If you like the uranium sector and you like hearing, Jordan Trimble speak on it, you maybe don't want to invest in Sky Harbor Resources, but maybe you do like his take on uranium, which is a very educated one, right? So Resource Stock Digest has a mandate to create content that helps tell stories that we believe are credible stories, and we try to present the main reasons why we think those are credible stories, and hopefully, some of those stories make money for subscribers if you all decide to act on your own accord and buy into some of those companies. So that's Resource Stock Digest. We take a fee. We wouldn't take the check if we weren't biased, meaning if we don't like the company, if we don't like the management, that's not going to happen, right? And it's just, we're fortunate enough to have been in the business long enough where we don't have to take a check to take a check. The primary income that Nick and I both make comes from us writing checks into companies. So you better believe that I'm going to be biased, but I'm going to be biased on behalf of our audience and biased on behalf of the people that follow our work. Because at the end of the day, our credibility is our capital. We don't have wins for people, or we don't present quality stories. People quit following, and then it's game over, right? So that's Resource Stock Digest. And I know Nick will, expand on that here a little bit more, but Digest Publishing is a completely separate entity and company. That is a publishing company that specializes in financial research. And that could be everything from crypto with Chris Curl, resource stocks. Nick and I both do those. Nick also does everything from crypto to tech to cannabis
to pizza.
To pizza. I was just going to get there, right? Congratulations on that. We talked about Papa John's a week or two ago, and we're going to talk about Papa John's some more. But in that company, with that company and with that audience, we don't accept any payment from any company. That is completely independent research paid for by subscribers that sign up to our service in exchange for our thoughts on the company, our due diligence, where we think the company could go, what we think the upside is, what we think the downside is. And so, Josh, to your point, that company that you mentioned, and I won't say the name, I've been wanting to talk about that company for months, and I had wanted to recommend the company for months prior to that. We were very insistent. By we, I mean Nick, myself, and a couple of advisors to us and friends and mentors. We were very insistent that because we hadn't worked with management before to help tell the story or recommend a company, because I love the asset, right? We wanted some sort of board representation, and they were. I want to say smart enough, kind enough as well, but also smart enough, because the gentleman that they put on that board is as methodical and systems based as they get, and we've worked with them and have had success in the past with them. So somebody on that board that we can trust systems and operationally was important for us while we develop rapport with the rest of the board and the rest of the team. And that's no critique of the existing management prior to. It was just important to us that if we were going to write checks, which we did, and they were substantial checks, and we were going to help finance the company, and we were also simultaneously going to help tell the story with our other business, you better believe we want to make sure that everything is on the up and up and things are getting done the right way. So that's the kind of due diligence and the level of due diligence that subscribers can expect, and readers and our audience at Resource Stock Digest can expect from us. And hopefully that answers your question for sure.
Good. Well said, and I'll try to expand a little bit. Resource Stock Digest does not make stock recommendations. It provides information for you to do your due diligence, but it is not a fiduciary or an advisor. It's not credentialed, etc. So we just put out content for investors like you to consume, to learn more about the companies that are on that website. And if you ever want to see all the companies that are on that website, you just go to resourcestockdigest.com. You can click featured companies right at the top, and it'll show you a list of all the companies that are currently paying a fee to be a sponsor of or featured on Resource Stock Digest. In the case of the company you mentioned specifically, that's a good microcosm or case study for how we try to do things in general. It doesn't always work out this way, because the world's a weird place, and sometimes we don't know right away if we want to recommend something. But typically we recommend things to the paying subscribers in Digest Publishing before we start taking compensation to help them tell their stories on Resource Stock Digest. And that was certainly the case with that company you mentioned. It was part of the webinar we did for Gerardo's Junior Resource Monthly back in what did we do that webinar? I don't even remember anymore. The first or second week of May.
Yeah.
Or maybe even April. But anyway, that was, before it was on the Resource Stock Digest site. And we still haven't even done an interview with that company on Resource Stock Digest. So we give those paying subscribers a head start for sure. The other question was historically how the stocks performed. I didn't put together a list, but you can go back and look, like at Patriot Battery Metals. Once again, we financed that before it was a sponsor of the site of Resource Stock Digest. We did that in private placement intel. And then once they, hit and there was a story to tell, they came on Resource Stock Digest. So that's the best cherry pick example, of course, of
Yeah.
a stock that goes up 10,000%. But on the whole, there's just, becoming a featured company on Resource Stock Digest doesn't mean that you're going to be a winner or a loser. It's just a tool to help you tell the story. I mean, our track record is the track record, and we've already gone through some of these
Yeah.
in the call today. The Hannons and the Kingsmans of the world who, gosh, we've been recommending on the publishing side since before Resource Stock Digest
Yeah.
was even owned by Nick and
Yeah. Gerardo,
right? While we were still with another publisher before we formed Digest Publishing. So,
Yeah.
and those have turned out to be fantastic winners for our paying subscribers. And then if you want a more formal list, I'm happy to put that together for you, but you can sort of do some cross-referencing. Like I just said, go to the featured companies page on Resource Stock Digest and see
Yeah.
which of those companies are in the portfolios over on Digest Publishing. And then can we expect unbiased coverage? Of course. Because that's what we do. As Gerardo said, the paying customers on Digest Publishing are the clients there. The Digest Publishing doesn't exist to serve the companies. It exists to serve the subscribers and the members. And so you've seen probably in the duration that you've been a member, sell calls that we've made on whatever it is, companies that are on Resource Stock Digest or not. And we sell for different reasons: to protect profits, to take profits because the narrative or the story changed, or something went really well, or there was a buyout, or they missed, or whatever it is. So we evaluate those on a company by company and a market basis, not are they a sponsor of Resource Stock Digest basis. So that was a great question, not just for Josh, but for anyone who's interested in either Resource Stock Digest or Digest Publishing. And you said, you've probably touched on this before, but you wouldn't mind a refresher. Yeah, the transparency is the last thing I would say. Like when you sign up for either list, like you sign up to Resource Stock Digest, you give us your email address and you get your first welcome letter. I mean, it's right there in the first welcome letter. Resource Stock Digest is owned by Nick and Gerardo. It's a separate business from Digest Publishing. We try to be upfront and transparent about that. And then, of course, we have all the things in the fine print, the terms and conditions, etc., that you're welcome to read that explain that as well. But given the track record, given the renewal rates and the low refund rates, I would say that we've been serving our members well, and it's I don't want to say symbiotic, that's not the right word, but Resource Stock Digest has been a great tool to further the network, to meet new companies. Sometimes companies contact us now that we would have not otherwise known about because they saw an interview or they came across the site or whatever. And so in that way they can feed off each other to the net benefit of everyone involved.
Well said. Well said. And I think it's the perfect segue into the premium portion of the podcast, because I'm going to talk about a company that was once upon a time a sponsor of Resource Stock Digest and then came off Resource Stock Digest many, many years ago, but yet remained in the portfolio because of the quality of the asset and the strategic importance of its product, mineral, metal that they have. And so let's get to the premium portion of the podcast. This is Gerardo Del Real, along with my friend, colleague, business partner, and co-host, Mr. Nick Hodge. This was the 321st episode of our weekly therapy session. This was a good one. Appreciate y'all's time, folks, that we call investing in Bizarro World. Have a great one, everybody.
See ya.